Hello everyone again. It's been a while. Been a crazy few years. This last year has been really hard in the accounting industry. Been a challenge. I know for a lot of you guys it's been really difficult too, but I think we're somewhat back to normal. So today I just wanted to go over some changes. We're going to look at the new tax form and how that's going to impact you. Stay tuned. We'll run a couple more videos over the next week or so that will be relevant to year-end tax planning. If you're a business guy or girl who has an S Corp or a partnership, very important you pay attention to the next couple videos I do. There's an opportunity there for you to save some money, and then we'll also go over some specifics on some tax planning things you can do. You can also go check out some of the videos we've done at year-end the last couple of years. There's some good stuff in there. We'll re-go through some of that over the next videos and bring it up to date. But if you really have some questions right now, you might check some of those out too, because a lot of it's still relevant. So let's go ahead and get started. Do you remember, I don't know, I think it was 2018, IRS had, or Congress or whoever, doesn't matter, not trying to talk politics, but they had a great idea that they were going to simplify the tax return. If you remember, we used to have two-page 1040. It actually, comparatively, made a lot of sense. And most everything could be seen on page 1 and 2. And from there, you could quickly go and figure out where anything else came from. Well, then they decided they were going to get us onto a postcard and really make the return simple. So they took us from 2 pages to 2 half pages. And then they added, I don't remember, 4 or 5 schedules. That way it would be easier for us than just to see it on 2 simple pages. Yes, that's what they did. So what I want to do today is go over the latest version of those tax returns. And what you're going to see is that we are now back to a full 2 pages plus all the schedules. Now, I want to go over some things because there are some things here that will really impact you. I'm not going to hit everything, but we'll go through it as quickly as I can, and I'll try to hit the highlights to give you the things that really matter. So one, if you remember last year's tax return, I got it in front of me. Line 1 said wages. Now we have line 1, A, B, C, D, E, F, G, H, I, and Z, because I guess they don't know how the alphabet works. But that's what we've got. I'm not going to worry about that. There's household income, tip income, Medicare waiver, blah, blah, blah. For most of you, it won't really matter, but that has changed now, so there's more detail. Other thing you're going to see here is that 6A used to be Social Security. Now we have 6A and C. C is for lump sum. That's generally if you've gotten, when you first apply for disability and you got a multiple years, finally by the time the attorneys and everybody got it all settled out, you got multiple in 1 year. If you have that, we'll cover that specifically with you. We don't need to cover it here. So that's that, and then we get down to line 13. That was still there from the prior year. That's your qualified business income deduction. And for you business owners, that's been pretty good for us, and that's still there. So I wanted you guys to know we still do get that. That's where you take a 20% deduction against your business's income. And there are specifics to make that work, but that is still available. Let's go ahead and take a look at page 2. As you can see, if we just look at this, we now still have a full 2 pages, so the reduction of our tax return evidently did not work. But on page 2, there's not a lot here that's changed, but I do want to go over a few things that really are critical to you. If you remember, last year, we had an expanded child tax credit, and we got more per kid based on how old they were. Well, that expansion is now gone. And unless something changes between now and when we file the tax return, which I haven't heard that's going to actually occur, we're back to $2,000 per child and $500 for those students who are 17 and still a student. If you remember, we had, I believe it was $3,000 per kid and $3,600. That is now gone. So if you had several children and had a big boom there, we don't get that this year. And that's kind of why I wanted to go through this. Is there some things that have changed, and I want you guys to be aware of it, because some of you that got really large refunds the last couple of years, those lines are now gone or have been reduced. And we'll talk about some more of that in detail in a different video, but I wanted you guys to see some things as I kind of set that up for you for it to make sense. The other thing that you'll notice down here at the bottom is, if you remember, we had the recovery rebate credit down, and last year that was line 30. This year they've reserved it for future use because you never know when they're going to change their mind and add some more stuff to us. But so far they haven't. That was a pretty big one for a lot of you who, if you did not get the recovery rebate credit in advance, we were able to recover that on the tax return, and that is now no longer there. Now, I want to get into some of these schedules. For one, the additional income schedule, not a lot I want to cover here. There are some new lines, but a lot of it's just stuff they've decided to put here instead of just letting it be an other line option. We've got a bunch of extra stuff. One is line I here, income from rental of personal property. If you engage in the rental for profit, but we're not in the business of renting such property, that could impact a few of you. I don't think it's going to get to many of you. Personal property, think equipment, things like that. If you want any Olympic medals, evidently those have a taxable value to them. So if you want a medal, we're going to pay taxes on it. But hey, share that with us and we'll share it with everybody. I don't know of anybody that want a medal with that we do stuff for, but if so, that'd be pretty cool. But guess what? You get to pay taxes. Not a lot of here, like I said. But hey, if you were incarcerated and you had some wages, we want to make sure we capture that because we want to make sure everybody pays their fair share. Let's go on to the next page. Educator expenses, we get to do those again. Health savings accounts. If you don't have a health savings account and you have a high deductible plan, it's a great opportunity. You get to deduct it, and then you get to use it for things you were going to spend it for anyway. Think eyeglasses. These ones are getting pretty shot. Think whatever you need to for medical, as long as you have it in the HSA account and it's a medical related expense, you just created yourself a tax deduction for things you were going to pay for anyway. So take care of that. But you have to have a high deductible health insurance plan. If you're self-employed, you have up until the time we file your return, the filing deadline to fund your SEP. So that can be a really good thing. The simple is a wage deduction, so that really needed to be done last year. If you don't have one, I believe it's too late for that. But don't forget, if you have a simple, you still have that 3% match that you're required to get paid. So don't forget about those. Self-employed health insurance. If you're self-employed, you probably know this, but some of you may be new to it. And if that's you and you're self-employed and you're paying your health insurance, make sure you let us know that, because that's a really nice deduction to at least help you on that. And also, even though the penalty for Obamacare is gone, we still have to reconcile that against your income if you got any kind of assistance. So if you're on the exchange, make sure you get that 1095 and bring it to us when we do the tax return. That way we can make sure you got the right amount, because it is income based. Yeah, there's no penalty if you don't have insurance, but if you're on the exchange, it completely depends on your income, and the government may owe you more or you may owe it more, and that's a really big deal. And a planning opportunity there is if you do owe on the exchange and your income is more than 400% of the poverty level for the number of people in your family, you're going to owe everything they gave you back. And that can be a big opportunity for somebody if you're on that threshold. If we can get you down to 399% of the poverty level, you can then only have to pay, I believe it's $2,500. And I've seen where people paid up to $25,000 back because they were getting too much assistance. But if you could contribute to your retirement account, if you could open up an IRA and fund it that way, if you could do something along those lines and bring your modified adjusted gross income down, then you may only owe $2,500. So that's a big opportunity for some of you who have that, who are getting assistance, to take advantage of that. Also, if you're self-employed and your income was higher, there could be an opportunity there related to this and other things to maybe go buy a piece of equipment and make sure we get down below that 400%. There's also big opportunities there to take advantage of potentially earned income credit and other things. So if you're self-employed, you're right there on the edge. Think about these things. You've still got a few weeks left to make some moves, and that could be a really big deal. And even if it's after the end of the year, you can still, as long as your income allows, you could still potentially open up an IRA for you and your spouse and get our income down below that level as well. And that can be a really big deal. What else do we have here? Alimony being listed separate. That's been there for a while. We talked about the Olympic medals. Attorney fees and court costs for unlawful discrimination. If you did have a court case and related to these types of items, unlawful discrimination, we'll want to talk about that separately. That's not something I can cover in this video, but that could be an opportunity for you. So that takes care of that. Those are adjustments to income. I want to go back. I think I missed one. Yeah, activity not engaged in for profit. So one of the things that's been going on, and I've been getting some calls about this, and there's confusion, which is disappointing, but there are guys out there just pumping out material trying to get you all worked up. We talked about this last year, and I warned you last year that this was coming. And what this is there's a reduced limit on the 1099K. So a lot of people are saying a bunch of crazy stuff out there, but here's what the deal is. If you're selling on eBay, Amazon, things like that, a lot of guys have not been reporting their income, and the IRS knows it. So they've come up with this concept that if you collect more than $600, you're going to have a 1099K given to you. Problem is, what about some of us who are just transferring money between friends? It wasn't income in the first place. I was just reimbursing you because, well, prime example, I went on a trip this last weekend with a buddy to do a men's retreat, and we rode in his car. So I'm going to send him some money through a cash app to reimburse him for his fuel. Well, that's not income. That's just sharing of expenses. But if you do more than 600 of that in a year, guess what? You just got a 1099K. Don't ignore those. If you get those, we're going to have to deal with it on your tax return. We're going to have to show that it was not profitable income. And then on the adjustment side, we will then show it as a expense directly related to that, so that the IRS doesn't come after you to get paid. So don't ignore those. Don't freak out, but don't ignore them. At the same point, if you're one of those people who has been selling stuff for profit and had just been trying to skate under the radar, the game's over. And that's why I warned you last year that this was coming. You need to go through your records, and you need to have records and record all your expenses. If you're going out and buying books and selling them on Amazon, hitting thrift shops, hitting garage sales, whatever it is you're doing, you're going to need your mileage logs. We're going to want all those expenses, because self-employment income, if you don't have any expenses to offset it, you could end up owing 40% of that back in tax, between the self-employment tax of 15%, 15 to 20% in income tax, and then your state of 5%. Long story short, that just hurt a lot. And I warned you last year, so make sure you take the time to go back and figure out your expenses, and then really start running this business like a business, because you can't hide anymore. Not that you should have been in the first place, but like I said, the jig is up. So time to come clean and let's get this right. So I thought that was an important thing to cover. Got stuff on household employment taxes. There's a lot of stuff that interest on. Stuff doesn't apply to most of you. They've just taken the tax return that was simple and made it incredibly complex, but that's what they do. And I like it because it keeps me working. So HSA distributions. This is important because a lot of you use your HSAs. I told you how good they are. But we have to tell the government if you used it for medical or not. So if you have an HSA and you did take money out of it, at least make sure you give us a note that, yeah, Doug, we used all of that, or Cindy, or whoever's helping you with you on the tax returns, we used all of that for medical expenses, or no, we didn't. Because if you didn't, it's taxable income. And so that's one of the things we're going to probably have to check with you on. So the more prepared you are to let us know those things, and we'll send out an organizer with questions and take a little bit of time to go through it, because it's going to help us get through your returns faster. This year, we've made some changes, and we feel like we're going to be able to get through returns a lot quicker this year. So hopefully that holds true. That's our goal. Our goal is to take care of you guys in the best way we can, and that's what we're going to try to do. And that's that. But this is just insane how the simple return now has so many pages. Residential energy credits, that's a good one. Those are back. EnergyStar.gov. EnergyStar.gov is an excellent place to go look those up. You can go in there and it'll tell you what the credit is for if you did geothermal, which I believe is back to 30%. I think so. I haven't looked at it recently. But geothermal, it'll tell you if you put in a energy efficient furnace, what the energy thresholds are. If it was an AC, it'll tell you what the SEER rating is. So EnergyStar.gov is very, very useful to you and good for you to know when you're looking to see, hey, what I bought, is that going to be providing me a credit on my tax return? And so go check that out, look at that, and then if it does, make sure you provide us the information. We'll make sure you get that credit. Credit for qualified sick and family leave wages. This is mostly going to be for people who are self-employed. So if you were out because of COVID, weren't able to work because you had COVID, or your spouse or your children had COVID, let us know how many days that impacted you in 2022, and we can take a look at that and see if we can help you out there. We brought that up last year on the video too, so take a look at that. That'll be helpful, and that pretty much takes care of most of the items on the base return. Clearly, I'm not going to go through every form the IRS does, but I wanted to go through through the form, some things that I thought you might want to know. And then there's a few other things which we'll cover in another video too. But while you're here, meals and entertainment, that's still, we get 100% deduction for 2022. That does expire, but we get 100% deduction. Didn't show up on this form that I noticed, or I missed it. But if you remember, we had the expanded dependent care credit. That has been reduced back down to pre-COVID numbers. And there's several other things, and I'll go through that in a different video. But this should get us off to a good start, get you guys primed up for this coming tax season. Stay tuned. Like I said, if you're a business owner, my next video will probably be very relevant to you. And then we'll also get into some year-end tax planning stuff, hopefully next week as well. So, or in the next couple days. It'll probably be the next couple days by the time I get this edited. We should have the other one ready to come pretty quickly. So that's it. Thank you guys for being good clients. Thank you for being patient with us the last couple of years. It's been really hard. And we hope to get back to normal, better turn times, less nonsense, and just be there for you. So with that, I'll call that the end.